quickly turn to our next presenter, which is you, Michael Salmony, which have been waiting here. And we're very, very proud also to have you here to give us the introduction into the CBDC market. You are an international recognized leader on the digital financial service innovation. You are a board level advisor to major banks, industry association, finance bodies across the world, and help in that way shape the future direction of the key European decision-making bodies. You're also the executive advisor to the board of Equins Worldline SE, which is Europe's largest, and by the way, the world's fourth largest financial processor of transactional service, for a sum of over 17 trillion euro per year. You studied at the University of Cambridge, UK. You're married and have 2 millennial children, but maybe most important, you're also an author. And you're an author of a cookbook for mathematicians. And you even taught me the power of some of these gigantic companies in the market, because you told me that if you sell a book for £20, you receive £1 from Amazon. Now, a very warm welcome to you, and we look so much forward to you introducing the CBDC world. Warm welcome.
Thank you very much for that kind introduction, Peter. It's a real pleasure to be here, and really honored also to follow that terrific presentation from Tata-san. That was a real joy to hear. Yes, I'd like to talk about CBDCs, which probably are one of the most exciting things that might be at the moment changing the payments world, with some things that I think are promised, which I don't think will happen, and some things which nobody's talking about, which I think will happen. So I hope I can share a few insights on that. I will try to share my screen. Hope that works.
It's working.
Yeah? Okay, good. So just to mention, these are my personal opinions. I'm not representing any organization here. These are just findings from the market. So just to get the terminology straight, because there are several things going around. Digital currencies come in 3 main flavors. One is the mad wild west of cryptocurrencies, which are basically created out of maths, and because people believe in them at the moment. And if Elon Musk tweets in the right direction, they go up, and somebody else tweets in the wrong direction, they go down. And there are about 4,000 of those, right? So there's a huge zoo of these cryptocurrencies, which are just created out of maths and people using graphics cards to create digital tokens. It's a real fun thing, and of course the media love this, and everything is full of these cryptocurrencies. And speculators love it because they can bet on things going up, and they can then bet on it when it goes down again. And it's also great for criminals, because if you want to do ransomware, or if you want to buy drugs on the dark web, then you need some means of payment which is anonymous and which can't be traced, and which doesn't do KML and AML and KYC and all these nasty things that banks do. So that's why criminals love it. And most of the illegal activity on the web involves Bitcoin in one version or another. About the volume of the US and European drug trade combined is about how much illegal trade goes on there. So that's one part of cryptocurrency. That's not what I'm going to be talking about. The next evolution of this is stable coins, which are now actually backed by something real, not just tweets and hype and graphics cards working out some algorithm. These are actually backed by some state currencies like dollars or euros, or backed by gold, or backed by some real assets. And there are some emerging examples of those. There are 20 billion of those in circulation, which sounds like a lot, but it's actually less than 1,000th of the global money moving around is in this. But that's an interesting thing to watch, and some third world countries are looking at it, and even some treasuries are looking at it. The topic I'd like to talk about is actually central bank digital currencies. This is money issued by central banks. So by the Bank of England, by the Fed in the US, by the Chinese central bank. These are things, if and when they come, which have the same value as real money, as a dollar or as a pound. And we've seen some first examples emerging from China and the Bahamas. This was something that was actually muted. I think the Bank of England was one of the first ones in 2015 when they came out and said, why don't we throw away cash and do cryptocurrency instead? And that seemed like a pretty wild idea at the time. But now 80% of all central banks across the world are actually working on this. So this is a huge development now. This has actually totally conquered the world. And everybody is clear that if we do this, this is going to be enormous. The infrastructure and the consequences, each one of in each country, it's going to be as big as building Rome. And I'd like to investigate why it may be worth doing this. But why did this happen? Why this sudden panic from that all of a sudden all central banks are doing that? Well, I think what caused it, the panic, was Libra. Facebook suddenly decided they might create a global digital currency. And that, of course, gave all central banks across the world the screaming heebie-jeebies, as we like to say in England. You know, if they lose control of the money supply and suddenly Mr. Zuckerberg is in charge of who pays how, that is not what a central bank wants. So that happened in 2019. And that's why only a few years later, we have this mad rush across all central banks across the world. But actually, the threat from Zuckerberg has since been mitigated. Immediately afterwards, the European Commission came out with a MiCA regulation, which basically said, if anybody wants to do a private currency, they're welcome to do it, but it has to adhere to the following 67,000 legislative regulations. And that's basically scuppered any idea that Facebook may do a cryptocurrency. The EBA also did an analysis earlier and showed the top 50 risks of something like a private digital currency appear. And you can see all the red and yellow risks on the right. So I think the actual risk in the developed world of something like a Facebook currency appearing has disappeared. But in the third world, that is still possible. And if you look at how Libra is gradually retreating more and more and going into some other niches now, I don't think they have the ambition to be the global currency anymore, because that's just not going to go past the regulators. But this has set the central banks thinking about this topic of digital currencies, and they not only said we don't want any private actors doing global currencies, they actually said maybe we should do our own. And for example, Lagarde, who is the head of the ECB, said we could be weakened in our sovereignty if China, for example, were to introduce digital currency and start introducing it in Europe, and we want to remain in control of our currency here. So we have to do our own and we have to innovate. And so it's, to me, not a question now of whether this will happen, only a question of if. Sorry, the other way around. Not a question of if, but a question of when. But why is this happening apart from the fear of Facebook and the fear of China? Is it just central bank FOMO because they see that the Bahamas have done it and China have done it, so we also need to do it now? Are there actually better arguments? Well, if you look at most of the discussions around CBDCs, they're the bits that personally I'm not particularly interested in. It's all the geeks talking about whether we should do it on this version of blockchain or on that distributed ledger, or whether we should do it token based, or whether we should do the payment flow this way or that way. That is all fine and good once you've decided why you actually want this and what purposes it's supposed to fulfill. Then you can go into the technical architecture and build it. So again, I think, as is usual with all blockchain things, we start with the technology and then think about what to do with it later. So let's please not do this and think about what the business reasons might be for doing a CBDC. And if you gather together the ideas about why what might be the economic, business, state, governance reasons for doing a CBDC, you do hear a number of arguments, right? It's, in fact, it's a huge list. We need to increase the move to digital. This will help. We can do an alternative to cash. We can do something against the dominance of big tech. We can do anonymous payments. We can provide more innovation. We can make the euro more global. It sounds to me what the French call a mouton à cinq pattes. The Germans call that an eierlegende Wollmilchsau. It's an animal that can do everything. It can lay eggs, it can fly, it gives wool, it can do everything. So this is a bit of a big ask for CBDCs, that they satisfy all these requirements simultaneously. And I think we will see in a moment that this probably won't be possible. But there are a few things that are clearly attractive about the CBDCs. For governments, this might be indeed an alternative for ideas like Libra. To the economy, this might actually stimulate more digitization, because you're not moving bits of paper with cash and notes and coins around. This is a digital version of cash. To central banks, this is an attractive thing, because one of the roles of central banks is to print notes and coins. And if one of their big raison d'etre goes away, and there are no more notes and coins, then they've lost one side of their business. So this would be a nice way of compensating for that. And of course, it would be interesting for consumers, because a consumer, if you can get digital money direct from the state, you know, guaranteed by the Queen or guaranteed by Miss Merkel, that might actually be much more attractive than having money that you get out of your local savings bank, which might go bust. I mean, we've seen some pretty significant banks go bust in the past, and your money isn't necessarily secure. So getting it from the state might be a good idea. So these all sound like very, very attractive propositions why you might want a CBDC. The trouble is they're all wrong. If you look at the argument that we need an alternative to Facebook, I already discussed that we now have regulations which make sure that won't happen anyway. So that danger has already been mitigated just by regulation. That we make more digital payments is nonsense as well. We already transfer euros digitally all over the place. We don't need another digital euro, which we can also transfer digitally. We already pay each other using all sorts of digital means already. There's no reason why another form of digital euro might increase that. The arguments that cash is disappearing and therefore we need a digital alternative is also nonsense. Although I'm afraid we've heard many times also in this conference that we are all about to switch to digital, I'm afraid that is not the truth. And just before I quickly grabbed the latest statistics from the ECB, which shows that cash is increasing. And in fact, if you look on the right, even in the last years, cash has been increasing particularly heavily. So the truth is that all payments are increasing and cash is also increasing. It is not that cash is declining and we are now all going digital. So that argument doesn't hold either. And the final argument, which to my mind is not sure whether it doesn't hold, but it's certainly much more complex, is whether this will be good for consumers. Because if you imagine that you will have in the future two kinds of euro in your iPhone, namely the euro that you got from your savings bank and also another euro that you got from the state, how do I explain that to the man in the street that I have two different kinds of euros? Why do I need two different versions of a euro or of a dollar or of a pound? That is going to be very hard to explain. I'm not sure I'm going to be able to explain that to my wife or to anybody else. I need only one kind of euro and not two kind. And the other consideration is, I mentioned earlier that it might be interesting to have the state-backed currency, which is backed by the Queen or by Miss Merkel. But if that is true, and I think it is, that could mean a bank run. That means people will take their money out of their savings bank and move it all into central bank money, because that is much safer. So I'm not sure whether we really want to create a bank run by creating CBDCs. So the central banks, of course, understood this and know that if they create this central bank money, it's going to have to be limited in some way. Not to say severely crippled, but it's going to have some limitations. Otherwise, everybody will run into this central bank money. And one way of doing this is, for example, to put negative interests on this so that your central bank money will actually depreciate over time, which sounds kind of scary, but the colleagues from Japan will already know about this. And of course, it can't be anonymous, because we don't want people to start paying for their drugs and doing ransomware and things with the state currency. So it's not unlike cash. It's going to be identified. And also to prevent the bank run, all central banks are saying there's going to be a limit on this. So in Europe, people are thinking about 3,000 euro holdings. In Japan, it's about 50,000 yen, which is just under 400 euros. So I'm going to have one account where I can hold as much cash as I want to at my savings bank. I'm going to have a bundle of cash, which I can put as much as my wallet can hold. And then I'm going to have this strange central bank money where I can only have 3,000 or 300 euros in. What sense does that make? Not a lot, actually. In fact, it creates a new problem, because what happens if you have a really attractive resource, like a state-backed currency, and you make it scarce? Well, people will start to speculate with it. That's what's going to happen. So you see that in all other assets. If you have something rare and valuable, then people will speculate with it. So you start the exchange rate between the central bank currency and the normal currency will fluctuate wildly, which is going against one of the goals of the CBDCs to increase stability. So the final argument that is put forward, why might want that, is we need a sovereignty against big tech. And for example, Mary McGuinness, who's the EU Finance Commissioner, recently said, you know, we're all getting increasingly dependent on Alipay, Google Pay, WeChat Pay, and all these US and Chinese big techs. And that's scary, because whoever controls the payment system increasingly controls our life. And I think she's absolutely right in that. But the question is CBDC the right mechanism to fight that? Because have a guess how CBDCs are actually going to be distributed. Where will they be found in the real world? Of course, they will be in our iPhones and in our Androids and in our Amazon accounts and in our Google wallets. And already the first press notices are coming up that PayPal said, yes, thanks very much. We would very much like to hold your CBDCs and distribute them and make use of them as a means of payment. So of course, these big US and Chinese giants are going to jump on this, and again, going to be the main distribution means for central bank money, which means we will actually be strengthening them rather than providing an alternative as Mary McGuinness wanted. Then there's the question of how do you motivate banks who will be called upon to distribute this new central bank money? Because if there's a bank run, they're not going to be hugely keen on it. If they have to do all the work of distributing the money to the end users, they're not going to be keen on it. And it may even crowd out some of the private solutions. Like, for example, JP Morgan is doing their own stable coin, and who's going to go for a JPM stable coin when there's a Fed guaranteed crypto money? So that's a problem I don't think we really have solved. So these are all the reasons that are being put forward, which don't really work. So let me try and come up with some of the reasons why this may actually be a good idea, which actually people aren't talking about. Well, I think it's actually going to be a huge benefit in sort of more unstable countries. In sort of third world countries, you know, where there's some dictator running a corrupt government with some central bank who people don't trust. If suddenly they have the option to, because they've all got smartphones, if suddenly they had the option to put a euro or a dollar in their smartphone coming from the European Central Bank or from the Bank of England, they will say, oh, at last, we've got a stable currency we can use in our country. So that is a real advantage for people outside the Western world, outside the euro and dollar area, where they can suddenly have a stable currency to pay with. That is a huge advantage and may actually increase the use of the euro outside our space. So that's a clear one, which is close to the next advantage, which is inclusion. There are a huge number of people in the world who have a phone but don't have a bank account, and they can only pay with cash. And that hugely disadvantages them. They always pay extra for paying with cash, and you even get people in the UK and in Europe who are not included, and they pay vastly towards this. There are lots of statistics to show that. So if CBDC is made really accessible to those who just need a phone, that they can suddenly pay cashlessly, that'll be a huge advantage to inclusion in the third world and also in the West. A more futuristic idea of which might provide an advantage is this digital money could be programmed. So, for example, some governments are thinking, I'm dispersing a huge amount of social payments, to those who are living on benefits, but some of them spend it all on drugs and drink and gambling and on cigarettes and alcohol. Wouldn't it be great if I had a kind of money that can only be spent on housing and on food and on clothes and education for the kids? And you could sort of put in a function into CBDC, depending on the merchant category, that this money would only work, that social payments can only be used for those cases. Another positive advantage, which again, nobody is talking about, is micropayments. This is something I'm afraid I've been a fan on all my business life, and I've got nowhere with this, just as I've got nowhere with replacing cash with digital payments. Micropayments, I think, would offer a huge, totally new market, which we don't have at the moment. Everything is basically on the subscription model. Netflix, Spotify, Wall Street Journal, they're all subscription models. That's the successful model, and advertising-based models. Those are all the ones that work. There isn't really a good pay-per-use. So I can only pay for one article or one picture in the medical textbook or one song, which works really efficiently. There are various sort of closed walled garden solutions, but nobody's really come up with a good micropayment solution. Maybe CBDC is at last the answer to that one. And finally, the last topic I would like to bring, which might be a real advantage for CBDC, is cross-border. And we all know that cross-border is a mess. It costs a huge amount. It takes too long. It's far too expensive, too many intermediaries. And the blockchain guys have been promising us for 10 years that this will get better, but they're not really getting anywhere. This might really be at last the chance to do this. And there's the BIS, the Basel Bank for International Settlement, a hugely important organization. They've given us Basel III and all these other things. They are organizing a thing called an mBridge, where they bring together the different CBDC organizations across the world. And for example, at the moment, they've got some in sort of Asia and Hong Kong, Thailand, China, and UAE. And they are trying to make them interoperate. And this is going to be a new system which can be so much easier to interconnect, unless, if they make reasonably similar choices on how to implement their CBDCs. This cross-border thing is going to be really, not really easy, but so much easier to do. And so if we think more of a CBDC as not as an e-dollar or as a euro, but as an e-global, then I think the music really starts to play. This is something I have in my wallet, my euros, I have my pounds, and I have my global. Now it makes sense. I don't want two kinds of euros, but I want this central bank currency because I can use it anywhere. And that I think is a hugely interesting development, which I think may actually make this work. And some of the people who are already in that cross-border global game are, of course, already starting to get worried, rightly. I mean, SWIFT, for example, I'm here just quoting this article on the right, that they say SWIFT currently brokers the bulk of all global foreign currency and has become a vehicle for US and EU sanctions. And so that's one of the reasons why China maybe was really quick to pick up CBDCs, because they wanted to be that. And that's why China is now doing the digital yuan, because they want to sidestep the dominance of SWIFT in the US. So we're going to see all sorts of really interesting power and political moves happening because of this. And that's why I think this topic is so exciting, because it goes way beyond whether there's a token implemented this way or the blockchain done that way. This has huge financial ramifications for monetary policy and how we will do the business. If you want to see some of the more scary ideas around CBDC, I would recommend this report to you. Some academics for the Econ, which is, of course, the top economic committee of the European Commission, and it is full of really scary stuff. It says this CBDC stuff can challenge the banking system at its core. This will probably lead to a bank run. This will stop money being created out of thin air by commercial banks. At last, get rid of the lower bound on interest rates and charge negative interest rates. If we abolish cash, then we can actually force consumers into accepting this negative interest rate. I mean, scary stuff. But they don't publish it as a warning. They publish this actually as a good idea. Such disruptive change is not necessarily a bad development, which I find quite extraordinary, quite honestly. I hope this report it doesn't get circulated too widely, so I really shouldn't be showing it here. But this is what could happen. So what I think is, if people start picking these kind of ideas up, this will actually damage the lovely idea of the CBDC, and we might end up with a media scandal. Because if the media get hold of ideas like this, that we could get rid of cash and force people into negative interest rates and kill the banks and make a bank run. I mean, I've had once in my life actually a headline in a tabloid newspaper on the front page. It was fortunately actually a positive development, because we came up with a single contact number for people to call if they wanted to block all their cards in one go. And the German tabloid actually thought that was a good idea, which was rather nice of them, and put it right next to the naked lady on their front page. But if the CBDC things come out, this will also make the front line of the tabloids across the world, and not in a good way. So I think that people really need to be careful about how to message this and which things we really want to promote here. So I'm reached the end of my time. I just wanted to summarize. I think there are loads of reasons for this CBDC which are being put forward. Some of them from geeks, which I'm not too interested in, and I hope they all have a great time once we've worked out what CBDC is supposed to do. Then they can come up with the technology. That most of the arguments mentioned by businesses and governments don't hold water, in my view, if you look at them slightly closely. Because it's not going to help with digitization. We're already doing that. It's not going to help, etc. I've already gone through all that. Some other business arguments, which I don't think are talked about enough, may be hugely worth exploring. And I've tried to talk about inclusion, about conditional payments, about micropayments, and about global cross-border. And the question still is, though, is this huge effort? I mean, we're creating new currencies in every country in the world. This is some people think instant was expensive, or open banking was expensive, or introducing the euro was expensive. This is going to be as expensive as all of those put together in every country. So is this really worth it, right, for these advantages? And there are some people who say no. For example, Australia says this mouton à cinq pattes will never fly. It is not worth the effort. And the Australians have already come out, for example, and said no thank you, at least not for retail. And some people saying, why don't we use all this money since that we seem to have in doing this CBDC, and actually put it into making existing payments better, instead of creating a totally new kind of payments? And that actually might be a smart idea. Okay, thank you very much for your attention. Hope you saw some things that you were interesting and new. Thank you.
Wow, Michael, thank you so much. Maybe just turn on your presentation so that you'll have a full view. I think your presentation, first of all, shows the diversity of a conference like this. We are at the one hand discussing the practical details and challenges of doing an SCA compliance check. And then we, on the other hand, have presentations like yours, which really, really makes everybody think. Now, post your question in the chat, and we will make sure that we go through that. And the first one is already there from Ivana, who says that, is it possible that states go in the direction of introducing CBDC in order to stop fully cash and introduce 100% control over the population's financial activities?
Yeah, that's a very good question. And I think the answer is already yes in the case of China. I think because China is a state where cash is actually not on the verge of disappearing, but going down hugely, contrary to Europe, as I showed, right? Apart from a few special cases in the Netherlands and in Sweden, but China cash is going drastically down. So China clearly has an agenda of saying, okay, this is wonderful because I'm doing social scoring. I want to keep my monitor on my population. And people exchanging P2P banknotes is not really what I want. I want to be able to see everything. And therefore, for them, getting rid of cash and introducing a digital alternative, where they can track every single transaction, is hugely attractive. So that I think your question is absolutely right for China, but that, of course, isn't transferable to Europe. I don't think anybody in Europe has that agenda. First of all, we don't have a reduction in cash. And secondly, I don't think any European government wants to control its citizens in anything like that way. But it is a welcome effect that one has more transparency in payments, surely. Yeah.
And that is probably also one of the beauties of your presentation, is that there are so many angles here. You discussed the Bitcoin environments, the criminal activities. A guy once told me that if you hold a 500 euro bill, the probability of you being a criminal is about 90%.
Well, we actually did a study on that because I wouldn't go quite as far to say everybody who has a 500 euro bill is a criminal, because some of us have bought a car, for example, and didn't want to carry huge suitcases full of cash around. But of course, cash is the preferred means of paying for drugs and for laundering money. And a gang was recently found out by the New York police who exchanged money in cornflex boxes. They put them, and they just gave each other cornflex boxes, and that looked innocent, but inside was cash. So we actually did a little analysis. How much money can you put inside a cornflex box? And in America, you can put about $100,000 in, because they only have small denomination notes. But in Europe, we have the 500 euro note. So you can actually put $1 million or more, I think it was, into a cornflakes. But although we have smaller cornflakes boxes, we can put much more in a European cornflakes box, because we have this high denomination notes. And therefore, Europe is much better for money laundering than America. But you will know that the 500 euro note, for exactly that reason, has now been taken out of circulation, because it serves no genuine purpose and is really useful for large-scale money laundering and drug trafficking. Yeah.
Now, in the big scheme of thinking competition and central banks against each other, you posed a scenario that said if China made a digital euro, that wouldn't really please the European central banks. And on the other hand, you said that if you lived in a dictatorship country, you would benefit from a central bank giving you access to a digital euro, could it be? Are you saying that we will now see that central banks will have to compete with each other on building the best and most convenient solution, and that currency that it will be based on will then increase in importance?
I mean, I wouldn't want to wager any bets yet how this will play out, right, in 10 years. But I think you have an interesting point. Yes, I mean, I mean, we already see that, for example, China is doing lots of infrastructure work in Africa, building harbors and railroads. And if their currency would suddenly start to run there, I'm sure they wouldn't be best displeased. And also there are some in the West who are increasingly concerned about the dominance of the dollar worldwide, which used to be undermined by fact and now no longer is. So I'm sure they would welcome if there were some alternatives. So there are very big political and monetary policy and sovereignty issues at play here, absolutely. And the central banks are aware of that. And we're not only going to see competition between PayPal and Volksbank, we're going to see competitions between governments. Yes, it's exciting times.
And we had the input from a previous presentation where a bank launched Apple Pay, and just on that ground gained a number of new customers coming in simply because it was more convenient.
There you go.
So the conveniency factor. Okay, last of all, maybe I'm going to try to teach you a bit, as your interest is also on the criminal side. The programming of the currency so that it can only be used for good purposes. Now, are you not, Michael, then the father of a new kind of criminal activity, which is exchanging programmable coins for cash or for coins that are not restricted?
That's a very interesting observation. I mean, you know, the saying is, if you create the ship industry, you've created shipwrecks. Whatever you create, you will also have some negative side effects. So I'm sure people will be very creative about how to misuse these as well. Yes, good point.
Good. Any more questions? Then just raise your hand. And if that is not the case, then thank you so much for enlightening us on areas that there is no way that we could have thought that out by ourselves. Thank you so much, Michael.
My pleasure. Thank you.
And with that,